Oppenheimer says, seems to me there was a tea party in Boston that was illegal, too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
So, and I said, well, what if it does happen? And he says, well, price will solve everything. I said, thanks, give me the gold. You know?
Why do central banks hold it? Well, it's a form of reserves. So why don't they hold diamonds? Well, it's tradition, long-term tradition.
Well, some people still think it's money.
Welcome back to the Junius Malpe channel, and thank you all for joining me. Real quick, immediate shout out, and thank you to Kalna for the super chat there. I see what you did there. I can see the 556, and I get it. I appreciate it. Beautiful way to send a hidden numerical message. Welcome to all of the channel members, to the most boring channel on YouTube, to the gold and silver stacking master race friends. That's what it is. If you're stacking, you're part of it. You are in it. And I appreciate all of you being part of the most boring channel on YouTube. Here, the extemporaneous ramblings of a madman, broadcasting live and unscripted. We're going to burn the first minute and a half with a great broadcast from Judge Napolitano interviewing John Mearsheimer. It's just a minute 36, so please just pay attention to it when it comes on in a minute. Got a lot of headlines pulled up, several stories linked to this. We'll give our 2 cents. Hopefully, is the sound coming in good? Sounds good. I've got some gold stories pulled up, some other economic indicators that you're going to want to look at that have been out in the news, especially this morning. And I'm just glad to see all of you again. Yeah, I've been busy. Calendars that thought I was AWOL or gone. Super busy, and also recovering from my surgery still. But it doesn't get me down. It's not enough to keep me away from doing what I do here. And I appreciate all of you, your patience. So a big shout out to all the channel members that are here already, lined up in the chat. Ray Finkel, man, he showed up right away. Bobby Jones showed up immediately. It was like 30 seconds after scheduling the live. Some of you that don't get the notifications, I don't know what to do. I don't know how to fix that. You got to click the bell. There's a notification thing with YouTube. I don't know if there's a delay or if the shadow banning is that powerful. I know some of you don't get these notifications. But Frank Pliskin's here. Good to see you, friend. Glad you're here. A1 Meat Eater Kid, Lou Sassel. Spall Walker is in the house. Behave yourselves because he's a chat moderator. He's got a wrench. Red Dawn, good to see you. Peter Grawl, Throck, Morton, Bam. Look at this. We got a whole clan in here. Who else we got? E.W. Fisher, welcome. Good to see you as well. All right, I'm going to get the volume going. And let's get this quick clip done. So let's cut to it because I think it's worth listening to. I don't always play clips from others, but when it's for news and broadcasts such as this, it's relevant, it's worth it. And let's just take a listen. Take a listen to this.
Gross domestic product of BRICS exceeding that of the gross domestic product of the West.
Yeah, I mean, it's very important to understand that two things are happening here. One is there is a major shift in the balance of power that has taken place over the past 10 years. And what's happened here is we've moved from unipolarity, where the United States was clearly the dominant player in the system, to a multipolar world. And organizations like BRICS have come online and are now quite formidable institutions. And this all reflects the change in the balance of power. The second thing that's happened is that the United States has done enormous damage to its reputation, in large part because of what's happened in Gaza since October. And countries all over the world, I should say countries outside of the West, are incredibly critical of the United States compared with what they used to be. There used to be, I think it's fair to say, a healthy respect for the United States in most places outside of the West. Not all places, for sure, but in most places. But that respect has deteriorated in all sorts of ways ways in all sorts of countries. And it's in large part because of our hypocritical behavior. And again, the main source of this problem is our relationship with Israel, what's happening in Gaza.
Israel.
John Tester.
All right, that was
fighting
that
for the
clip
toughest
there.
boys.
Come on, get off my screen. All right, this was a clip. You know, we've been talking about that whole multipolar world, unipolar world, the shift that's taking place on this channel for quite some time now. So that shouldn't be unfamiliar to you. Those terms, those phrases, that should be something you're accustomed to, especially here on this channel. That's a theme, something we visit often. And hey, Shuffle Silver, I see you. Thank you for the super chat, good friend. This clip, this piece here, I just got this when it first happened. A friend, a contact here of the channel, one of my dispatches from the field, a field reporter on the other side of the planet, sent me this the day the news broke. And this was when the Saudi Crown Prince declined the Italian invitation to attend G7 summit session due to Hajj commitments. And then, one of the clips, the message above says, no need to attend G7 if they're no longer on the petro-dollar standard, right? This is not getting, and it wasn't, especially when it first broke. I mean, it was huge news. It should be big news. This is the economic ramifications, the entire strength of the reserve currency system in the United States. The dollar itself is tied to this. It's going to affect many things. The ramifications of it, the domino effects of this are yet to be seen. You're talking years, decades out, this will have effects. And I hope the Saudis stick by it. Now, we're going to look at some of the articles and dive into the news of it. Obviously, many of us weren't born when this agreement was signed to price oil in dollars, to come up with the petrodollar trade, which in turn gave a lot of strength to the US dollar because you had to buy oil in dollars. That's no longer the case. Now, and I thought, for sure this would get more news than this is getting. It seems like the United States news media isn't paying a whole lot of attention to it. When it first hit, it was mostly fringe sites that were reporting it. So it was, take it with a grain of salt type of a thing. Is this really happening, or is this just fringe sites kind of, theorizing that it's going to happen? Well, you know what? It's all over the place. It's headline after headline. You can see it. You can scroll through. Even later on, 3 days ago, NASDAQ picked it up. Lots of news has been picking that up. You can see it. There's Reddit threads discussing it. If you happen to be one of those people that visits Reddit, I don't know very many people that do. You've got headlines here after headline here in the news section of the Google. And again, that's difficult to really trust when it comes to searching for news. However, it's showing up there finally. And you can see here from the Business Standard all the way down, headline after even Newsmax, Islamic City. I've got some from MSN. I've got some other ones pulled up here in a second. But you've got headline after headline talking about the Saudi Arabia petrodollar exit, a global finance paradigm shift. We've even seen it in some U.S. media here. I think I've got it on. Yeah, here we go. We've got one right here on. This is the Business Standard. Now we've got Saudi Arabia's petrodollar exit, a global finance paradigm shift. This is the main headline today that we're going to be looking at, this article, and I wanted to just read through some of it with all of you. The crucial decision to not renew the contract enables Saudi Arabia to sell oil and other goods in multiple currencies, including the Chinese RMB, the renminbi, euros, yen, yuan, instead of exclusively US dollars. Additionally, the potential use of digital currencies like Bitcoin may also be considered. And you know what? The Saudis have a pretty strong affinity for precious metals. I wouldn't doubt if somehow gold and silver, or gold and silver linked to cryptos, things like that, end up being some type of a settlement for oil as well. I'm sure they wouldn't refuse it if a nation offered them metal for oil. If you are familiar with this channel, we did a video years ago about the silver that was being sent to the Saudis for oil during World War II. They didn't want dollars back then. Before this agreement was signed, they were demanding silver payment. And so the United States was shipping silver coins that were struck in Philadelphia. I've shared one with you that was sunk by a U-boat to the Saudis in payment for oil. So they like real money. They like sound money. They don't like when people can just inflate paper dollars and fiat leper currency. That might have played into this decision. They're not stupid, and they've been around a while, and they have something of value. We're not offering them anything of value anymore, and that being the dollar. It's valueless. It's worthless. It truly is. How can it have any value whatsoever if you can make as many of them as you want and give them away freely and just print them and then go onto a screen and hit the keyboard a couple of times and add zeros to it and make more and more and more? It just doesn't work that way. We're robbing them. They know that. They can see it. They can smell it. And so they didn't renew this agreement that was signed 50 years ago. The expiration was just earlier this week. And, well, they decided to just, not renew it. And that makes perfect sense. I wouldn't have renewed it. I'm surprised it took them this long. But again, they were in a 50-year contract, so they had to wait a little while. Significant financial upheaval is potentially ahead of the financial world as Saudi Arabia has decided to not renew, and it's not 80-year. I think it was a 50-year plan. So there's a typo up on the screen there. I don't think it was 80. Maybe it was 80. But I kept hearing and reading in most things that it was 50. So they didn't renew this petrodollar deal with the U.S. The deal expired on the 9th of June. It was a cornerstone of the United States' global economic dominance. It's one of the things we've talked about on this channel for years as one of the reasons that the dollar had some remaining strength or palatability for trade. It's one of the reasons that gave the reserve currency its strength. It's the reason other nations held it, used it, trusted it in a way. It was originally signed on the 8th of June, 1974. So yeah, it was only 50 years. The deal established two joint commissions, one based on economic cooperation and the other on Saudi Arabia's military needs. At the time, it was said that it heralded an era of close cooperation between the two countries, says Katja Hamilton of Biz Community. American officials at the time expressed optimism that the deal would motivate Saudi Arabia to ramp up its oil production. They also envisioned it as a blueprint for fostering economic collaboration between Washington and other Arab countries. The crucial decision to not renew the contract enables Saudi Arabia to sell oil and other goods in multiple currencies, including the Chinese RMB, euros, yen, yuan, instead of exclusively in US dollars. Additionally, as I said earlier, the potential to use digital currencies like Bitcoin may also be considered. This last development signifies a major shift away from the petrodollar system established in 1972. Pause. What happened in 71? Nixon closed the gold window. Remember that? So the dollar this is beating up the dollar. I mean, it's just blow after blow. 50 years of getting the crap kicked out of it. Not to mention the domestic problems that are taking place in eroding any faith, any trust, any value remaining in that paper leper fiat. When the U.S. decoupled its currency from gold, and it's anticipated to hasten the global shift away from the U.S. dollar. Again, a global shift away from the U.S. dollar. Even Jerome Powell admitted that over a year ago. This is a topic, an issue that we have hyper-focused on here. You look at the inflation that's been taking place. You look at this. You look at all these factors, and all it does is it continue to validate our assessment, your assessment, what you know to be true, that the dollar is on a decline. It is being debased and devalued, and there's no coming back from it. I'll show you an article in a minute. It's just the same thing. It's like, again, more vindication for what we believe to be true. I haven't been really able to buy a lot of metals recently. I did pick up a Libertad, though, recently, just because I wanted to buy a 2023 silver Libertad. I love that Mexican silver. It's some of my favorite. And I was holding it and looking at it when I opened it out of its little package. And I'm looking at the mountains, and I'm thinking to myself, you could move a majority of that mountain there I'm looking at in the distance. You could gobble up all of that material, all of that dirt. You could smelt it, melt it, refine it, and assay it, and you might not even come up with an ounce of silver. It's that scarce. A lot of the easy silver's been found already. And many mountains, more mountains, have nothing in them than do. It has real value. It's very difficult to get, right? Silver and gold. Same with oil. You got to find oil. You got to dig it. You got to get it out of the ground. But the supply of dollars is limitless. There is no effort. There is no labor. There is no work that goes into producing dollars. They just print them. They just print them. They just spew them out. They vomit them out. They even diarrhea them out. They just come out. They just emanate out of the orifices of the United States. The disease of the dollar. Now, these cross-border CBDC transactions, in a more recent move, Saudi Arabia has announced its involvement in Project mBridge, a project that explores a multi-central bank digital currency, a CBDC platform shared among participating central banks and commercial banks. It is built on distributed ledger technology to enable instant cross-border payment settlements and foreign exchange transactions. That sounds very interesting, very familiar. It also sounds very blockchain-ish to me. The project has more than 26 observing members, including the South African Reserve Bank, which was green-lighted as a member this month. BRICS is growing. As we just saw, that's why I put that video up you saw with Napolitano. The BRICS are growing in power. More and more nations are joining them. That's going to become I believe, the currencies that they use and whatever mediums of exchange they come on to settling with globally. That's going to be their value. That's going to be the currencies that people want to use, nations want to use. That's going to dictate things. The dollar is not going to be as influential. And those that use the dollar as a club to beat other nations into submission, to exert their will, it's just not going to work anymore. It's going to lighten the blow. It's not going to be as painful to suffer, the United States saying, "Oh, we're going to flex our economics upon you with our dollar," and people are just going to laugh them away, and that's good. This is great. It's a little bit of humble pie, if you will. The better-known observing members of mBridge are those of the Bank of Israel, oh God, Bank of Namibia, Bank of France, Central Bank of Bahrain, Central Bank of Egypt, Central Bank of Jordan, European Central Bank, the International Monetary Fund, Federal Reserve Bank of New York, Reserve Bank of Australia, and the World Bank. In tandem, the project steering committee has created a bespoke governance and legal framework, including a rulebook tailored to match the platform's unique decentralized nature. Ladies and gentlemen, we are entering a new era, an epochal paradigm shift. This is something that many economic professors I've read in the past have discussed as a potential reality, and it's slowly coming to be. None of these things happen quickly. Again, none of these things happen fast. This is the wheels of government and policy and the wheels of economics turn very slowly. However, the impacts of them tend to arrive suddenly. Without notice, your life can change, or your economy where you live might change. Who knows what this will do to the price of fuel in your location, in your region, the price of commodities, even food, wheat and grains, meat, vegetables, all those types of products. This is going to shift and affect literally every single facet of the global economy. That's what I think is going to happen. And that's what, from what I read, from what I gather, from those who have opinions on this. It's going to affect precious metals, because what does it take to get gold out of the ground? A significant amount of oil, right? We've always looked at that linkage there. The amount of gallons of fuel that it takes to extract a singular ounce of gold. I remember reporting on it years ago, almost a decade ago, and it really imprinted on me the tie between oil and gold when I read that, I think at that time, it took anywhere from $600 to $750 worth of fuel. I think it was diesel to extract a single ounce of gold. That's quite a bit. It's changed since then. I believe it's only gotten more expensive. It's probably in the $1,000, $1,500 now. That was back in 2015 or 16 or so, those numbers. And with fuel prices, labor prices, the all-inclusive cost per ounce sold at these mines, it's only going to drive that further. That's why the value of metals can only change. It can only go up. It has to. Not to mention the dollar, which they're still trading, it seems, here in the United States, which they trade metals at. The dollar is just being debased and devalued. It's eroding at 3% a year. That cooks in, and that's their numbers. When I look at that, that's where the guarantee comes in. That's the guarantee that metals can always and will always, at a bare minimum, there's going to be some lag years, yeah. It just catches up the year after that, though. And I've showed you those charts. There's no reason to look at them again right now. The average, the average is like, 10% a year we looked at gain. But that's why that you're only going to, if you see just a 3%, that has to happen. But it's going to be more than that. But that's the minimum. And you and I both know, because we've looked at the numbers, we've looked at the data out there, the real inflation numbers. It's really 15 to 18% the inflation rate. They're burning it. The dollar's losing value so fast, it's mind-numbing, truly, truly mind-numbing. It should shock most people. Most people are walking around, again, like we say, in that zombie state of mind. The zombie consumers, the people watching sports, the people that are worshiping celebrities, the people that go to Taylor Swift concerts. They don't get it. They're never going to understand this. They can't make a connection on why their groceries are more expensive or why there's less chips in a bag. They're just listening to the stupid politicians, right? Pocahontas, Biden. They think the grocery stores are greedy. They think the oil companies are greedy. That's why gas prices are going up. They don't get it. They can't make the connection. They don't know what's taking place far removed from where they are in their little peasant world. They don't get it. They're strapped with debt. They're working their slave wagey jobs. They're grinding away, if they are at all. Some of them are probably on disability or welfare or who knows what, unemployment. Some of them are just choosing not to work at all, living with their parents or whatever. The fact is, the currency that they have to use, the settlement of account, the units of exchange, the medium that they use on a daily basis, those digits in their phone, in their Venmo, in their bank transactions, in their Apple Pay, whatever, when they're tapping their phone at the store, those digits are losing their ability to acquire goods and services every single day, less and less and less. It's eroding. And we're living in an inflation nightmare, truly, among other factors that are attacking that currency's value. And it's affecting all of you. Those of you that live in Europe, if you're using euros, or if you're in the United Kingdom and you're using the pound, it's happening to you. If you're in Australia and you're using the Australian dollar, it's happening to you. This is global. These are global effects. The one thing that transcends all of those and all of those governments and all of those governments' manipulations and power is metals, truly. They can't get a grip or a control on those, especially when you hold it physically. Especially. I mean, I don't know if you're not. I mean, you have to be. Most of you are. If you don't hold it, you don't own it. I mean, when it comes to the paper side of things, that stuff could disappear tomorrow. We know the scenario there. They don't have it. They've sold metals that don't even exist, they're not even out of the ground yet. We know those ratios. They're not fooling anybody. So this is massive, right? I mean, again, do we have to go back? Do we have to go back and look at the headline? It's in the news, and we're not making this up. It's all over the place. I just showed them to you. They're all over. This is happening. This is now. This is real. But let's move forward a little bit. There's other things, right? Because I know some of you get, and I'm not talking to the diehards here. You know, those that are part of the stacking community for a long time, especially those that have been on this channel for a decade or more. You don't shake in your boots. You're not timid. You've been through this warfare, these trenches, the psychological warfare. You have witnessed it. You've bought metals, and you've suffered the manipulations of markets. And, you know, some of the more newcomers, the new arrivals to the stacking world, and I'd say, when I say new, I mean, you're 2 to 3 years. Those that might have just come on board. It gets a little nerve-wracking for them. They get a little upset when there's dips or when it doesn't move as quickly as they anticipated, or they thought, you know, I don't know if they expected some moonshot, or they thought they were going to buy silver 2 years ago and it's going to be $500 an ounce today. Obviously, that's not the case. We're not there right now. And they get a little upset. And I read the messages. I see what they do, how they react when there's a dip, when the markets crash one day. Let me take a sip of tea here. Hold on. I made some afternoon British tea. It's actually pretty mild, pretty good. They get upset, you know, especially recently when there was a couple of 2 dip days on metals, even though we were still up. We're still up on the year like 20%. But it fell, you know, like 6% from 30% down to like 22% up for silver. There was some, I'd say, not anger, hostility, just there was some questioning, right? There were some people that were like, what's going on? Why did this happen? Well, you don't have to ask. Don't look at the day. Like I said, I made a video about that. Don't look at the day moves. You got to look at the long term here. Look at this. Look at this. How this story alone should give you peace of mind as a precious metals enthusiast, right? As a stacker, as a gold and silver hoarder. They're going to try to shake you out. They don't like that you're buying metals. They don't like that you're practicing economic independence from their tyranny, that you're exiting their system, their economic model, that you're showing distrust, that you lack faith in their power, in their fiat. Because that's what it is when you buy metals, right? You're defying them. Now, gold's getting harder to find. This goes on board with all of this. Okay, we're again, the world is shifting, the world is changing. Gold is becoming harder to find, and this is something we have also discussed. So take the petro-dollar situation, the BRICS situation. Gold harder to find industry body. Many prospective areas have already been explored, according to the World Gold Council. The gold mining industry is struggling to maintain production growth as finding deposits of the yellow metal has become more difficult, according to the World Gold Council, cited by CNBC on Sunday. Data from the Trade Association reportedly shows that mine production rose merely 0.5% in 2023 compared to a year ago. In 2022, the growth was 1.35% in annual terms. It's almost less than half. Whereas the year before, it had risen 2.7%. We've seen record first quarter mine production in 2024, up 4% year on year, World Gold Council Chief Market Strategist John Reed told CNBC, adding, but the bigger picture, I think, about mine production is that effectively it plateaued around 2016, 2018, and we've seen no growth since. That lines up perfectly with the whole peak gold theory. According to Reed, it's becoming harder to find new gold deposits around the world since many prospective areas have already been explored. Now, let me read to you something a friend of mine surmised when he and I were both discussing this very topic. If I can get to it real quick. Here we go. Oh, yeah. So he wrote me this. He goes, he when he read this part here, he digested. He goes, he pointed out that the large-scale gold mining is capital-intensive and requires significant exploration and development. It takes an average of 10 to 20 years before a mine is ready for production. 10 to 20 years. And they're not even finding those sites. They're not even doing well when they do find them. They're not finding the large amounts of gold that they used to find in the past. The technology is there, we have it, but the gold's been exhausted, and it's becoming more and more and more exhausted. He pointed out that large-scale mining is capital-intensive and requires significant exploration and development. It takes 10 to 20 years before a mine is ready for production. Adding that only about 10% of discoveries contain sufficient deposits to even warrant mining. Only 10% of them. That means if you find 100 places that have gold, only 10 of them are even worth extracting metal from. Moreover, it can take several years to secure the government licenses and permits needed for mining companies to start operations. Many mining projects in remote areas require building infrastructure such as roads, power, and water. All of that is going to be transferred into the cost, into the value of the metal. They're not going to do that for free. It's getting harder to find gold, permit it, finance it, and operate it, he said. Around 187,000 metric tons of gold has been mined throughout history, according to the report, with an additional 57,000 tons still unexcavated, if they can find it and get it. The price of gold hit record highs last month, rallying to nearly $2,450 per ounce in the wake of rising global geopolitical tensions. On Monday, the precious metal was trading at $2,330. We'll check in here in a moment to see what metals are today, but let's keep going with these stories. Again, any gold bears here? Anyone in the chat want to be a gold bear today? Anyone got any dent in the head Harry here? Is he tuning in? Any other gold bears around? You don't hear from them lately. I haven't seen a single gold bear article in 3 or 4 months. Where are they? Where are they? Where did they go? Have you seen them? They don't exist. They're in hiding. They're in hibernation. Either they're in denial. They must be embarrassed. Let me take another sip of this tea. Nothing like a good afternoon tea. Reading about economic collapse. All right. Check this one out. It gets better. It gets even more real. Do you remember chapter 28, Dying of Money? I know I refer to that quite a bit, right? Frequently. Were we right again or what? I mean, come on now. Look, remember when I told you it was too late? What's that song? Mrs. Maltby, you're a musical expert. It's a horrible group. It's a horrible band. It's too late. That one.
Apologize.
That's it. It's too late.
I actually don't know who
It's too late to apologize.
I don't know who it is.
It's too late.
I just know that I hate
too late. It's too late. It's too late to turn back inflation. It's too late. Experts predict inflation, election trouble for Biden. Too late to fix. Remember I told you that the momentum of inflation has reached a point in which there is no return. There's no way to dial it back. It's done. It takes a life of its own. The momentum is cooked in. It's gone. It's cranked now. And again, we are witnessing that with our very eyes. It's too late. The Federal Reserve maintains interest rates at current levels in face of stubbornly high inflation. They've said, again, they're not going to cut rates this year. They might, possibly, maybe, if they feel like it, maybe do one little tiny bitty, itty bitty, bitty cut. I doubt it. They're getting rocked. Economy experts are predicting trouble for Biden as the nation draws closer to the November election, leaving little time for his administration to fix the stubbornly high inflation plaguing Americans. Inflation currently sits at 3.3%. That's their numbers. Add 10%, so we'll call it 13. You're right, it's more than that. Pre-1983 numbers, pre-1990 numbers, they keep changing it. And remember recently, what did they do? This is a pop quiz. What did they throw out? What did they say they're no longer going to include inflation? You guys remember? This is just a tiny little quiz question. If you don't get it, that's okay. Most of you have it every single day, but it was causing problems with their metrics, so they're like, let's toss it. Get rid of that. It's coffee. They threw coffee out. You been to the store lately? You looked at coffee? It's ridiculous. It's ridiculous. Coffee's if it would keep longer, it would be great to stockpile. Yeah, you got it. Kevin James Hanford, boom, he wins. It's coffee. They dumped it. They had to get it out of the basket of goods they use to calculate inflation because it's responding and going up quite quickly. Quite quickly. Those poor little farmers in other countries, right, that shade grow organic coffee and try to ship it to the little beatniks and the little people in their Seattle coffee shops and such. They love their coffee, but they just don't get the economic situation behind the prices. They think Biden's good, but they're complaining about their coffee prices. So we know inflation's more than 3.3%. We know it's been cooking much more than that for years. Do you remember when we were talking about inflation and no one else was here? We were calling it, predicting it, notifying you of it, saying, look, this is coming. This is happening. Get ready for this. A lot of people were in denial. A lot of people say they just didn't see it yet. They didn't see it happening. They didn't see it coming yet. There was denial at every level, from retail all the way up to the political class. Very few saw that this inflation was going to happen. And in reading these subjects over the last decades, myself, one thing I've realized and witnessed in these articles and even pieces put out by renowned experts in the field of economics that I respect, metals is quite often delayed in its reaction to these inflationary movements, sometimes 2 years or more out. So what I mean by that is like the inflation we're seeing today and the inflation we've seen recently, we might not see the moves in metals responding to these numbers, to this activity, for another 2 years. And look at where we're at currently. You could see massive spikes in metals valuations in a year or 2 or 3. And upwards and upwards and upwards. It's again, my point there is it has to and can only continue. we're not going to see a return to the values we saw before. You're not going to see silver at $8 again. You're never going to see gold in the $1,000 range again. Ever. Ever, 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 ever. Never, ever, forever. They're not going to strengthen the dollar to that point. It just can't be done. It's impossible. It truly is. It's impossible. It's impossible. Don't say it's impossible, Unions. The Federal Reserve on Wednesday announced it would maintain the federal funds rate range at 5.25 to 5.5%, where rates have held steady since July. An expected decision considering inflation rose less than predicted for the 12 months ending in May, and the core consumer price index rose a better than expected 3.4%. Ladies and gentlemen, inflation's too late for them to fix. And I'm not on Biden's side here, but it's not. Do you think the geriatric, crippled old man who shits himself, do you really think he knew what was going on? Do you really think it's his fault? Or maybe perhaps it was his handlers and those around him and those at the Fed, the shadow figures that remain unelected. Yeah, come on, you know who's in charge of this stuff. The financial world. It's not the president. He doesn't do anything. He doesn't make decisions. The guy just limps around and bumps into things.
Hey,
tries
man
to,
likes his ice cream.
He tries to sit in imaginary chairs. He has to be dragged off stages and trips over things that aren't there. All right. Gold prices are likely to reach a high of $3,000 per ounce over the next 12 months. This is from Citibank. Citi. They put this headline out. That's kind of bullish. And sometimes they actually they're under it. They'll undershoot where metals are going to be. Like a lot of times, I think when they predicted last time I saw, if I recall a headline, this is going back a little bit, but they said something like, $1,600 this year. It blew past it by several $100s. This year, I believe when we came into this year, Citi was one of the banks calling for like $2,200, $2,250. We've beat that. Again, the high was at $2,450 already. So if they're saying 3,000, 3,200, 3,300, 3,500, when they say 3,000, I think they have a little comfortable cushion there, because if it blows past that, great, they still look good. They still look like they did right? They still called it, but it went beyond where they predicted. And with the recent developments with the Saudis, absolutely. All that can do is push it even that much further. So 3,000 gold prices could surge to 3,000 over the next 12 months, Citi analysts said, as a combination of strong physical demand, central bank purchases, and macroeconomic factors continue to support a bullish outlook for the yellow metal. The gold price path is unlikely to be linear, but average prices should trend higher in 2024 and 2025, Citi analysts wrote. We see the market supported well above the $2,000 to $2,200 per ounce. That's the thing. Again, back to what we said earlier, there would come a point, once gold passes 2,000 and maintains it for a while and continues climbing, that we would never see it go below $2,000 an ounce again. And I'll repeat myself. You will buy metals, or people will acquire precious metals at the price they deserve. So those people that are not buying metals now, if they ever make the decision to buy them, if they ever wake up somehow, some way, and realize the truth, they'll buy them. But they'll buy them at prices much higher than here, much higher than you've ever purchased them. And they'll buy them at the values that they deserve, which is the present time that they make that decision, which will be higher than today, most likely. So it's going to nominally test all-time highs into the end of 2024 before surging to $3,000 per ounce in 2025, the firm added. Several key factors underpin this bullish outlook. Firstly, the market's asymmetric risk skew has already demonstrated resilience, with gold prices rallying to $2,400 per ounce despite a strong dollar, high interest rates, and robust equity markets. Yeah, remember that's a great point. Gold and silver have been doing these movements recently and are up significantly this year. Significantly. Again, like I told you before, mutual funds would do anything to have these numbers up 20 and 30% on the year. And we're only 6 months into it. They'd do anything to have that. They'd call it a day. They'd think they did good work. They'd reward themselves with bonuses. The metals have done that. in spite of high interest rates, which is kind of counterintuitive. You think if high interest rates, that would encourage people to invest in dollars, hold treasuries, and get that 5.5%. No, because the markets and people who know that are out there, they know those numbers aren't true, and they know that it doesn't matter. It doesn't matter what those interest rates are. Metals will do better. That's the truth point of it. It doesn't matter what interest rates are. They know that metals will outperform those. So they're still going into metals. They're still acquiring metals. A negative turn in U.S. growth exceptionalism should be positive for gold, enhancing bids for duration and haven assets, all else equal, the note continues. In a 6 to 12 month context, Citi sees the risk skewed towards weaker growth and lower yields. U.S. election uncertainty and a potential red sweep would likely bloat fiscal deficits and boost term premia, enhancing spec gold demand for alt fiat. The prospect of peak interest rates also supports this optimistic forecast. An easing cycle from the Federal Reserve combined with a rally in treasury markets is expected to be a significant bullish factor for gold. As soon as they make that decision to cut rates, as soon as they do it, it should buoy gold and silver. They should react. They should jump. I would imagine even the crypto world will see a huge green spike as a result of that type of behavior. The prospect of peak interest rates, again, supports this optimistic forecast. An easing cycle from the Federal Reserve combined with a rally in treasury markets is expected to be a significant bullish factor for gold. Citi's economists foresee a U.S. recession later in the second half of 2024, which could catalyze lower yields and higher gold prices. Oh, we've got some signs. That's already happening. It's getting there. There's some stuff. Wait till you see the next couple headlines coming up. I'll show you. Moreover, official gold sector demand remains robust. Emerging market central banks, in particular, have been significant buyers of gold, a trend that is expected to continue. Citi also points out strong retail demand from China, noting that Chinese consumers have been accumulating gold at record rates. Now, the Chinese government has paused some gold buying. That is why we saw a dip in gold recently. Everyone panicked. Oh, the Chinese are slowing down their gold buying. They did it because the prices were at all-time highs. And they can move those markets. So they were waiting for it to dip a little bit. They're just cautious buyers. They're just like you guys. China's like, 2450. They would say that. 2550? We wait till it go back down at 2400, 2200. I'm not being racist. I'm not making fun of them. I'm just joking around. But they probably said that. They probably said they're going to wait. And they probably didn't say their R's very well. But that's okay. They still know what's up, and they're buying gold. So they're probably going to wait till it dips a little bit. But they'll continue buying. You know, China's been buying gold as long as they've been around. They've been buying silver as long as they've been around. They're not going to stop now. They just paused. And everyone panicked in the West because, again, we can't think anything beyond weekend to weekend and sports skip-ball game to sports skip-ball game. Americans don't know anything. They're silly. They're little goofballs. They're sipping their pop. They're walking around. You know, they're managing their cholesterol by dissolving the fats in their brain. They're getting stupider by the day. And, all the power to them. Turning to other precious metals, Citi also has a bullish forecast for silver. Ooh, I like the sound of that. Oh, yeah, here we go. I missed a line. Healthy Chinese gold premiums suggest demand is pent up and may stay strong. Okay, but they see a bullish demand for silver and copper. Keep those pennies, ladies and gentlemen. Keep those pre-82 pennies. They project silver prices to rise towards $38 per ounce over the next year. Pay attention to that. Pay attention to that number. So we're looking at silver, probably 40. We talked about that. Paul S. says, more Caitlin Clark talk. I see that name in the headlines all the time, Paul. I don't get it, man. Nobody watches women's basketball. They're putting her name out there. Those are forced headlines to create forced interest to steer the dumb pup. No one watches basketball. First off, no one watches basketball. I don't watch basketball. I can't. I've never watched a full and complete basketball game. I've never watched basketball, ever. Zero interest to hear those little squeakers on the court. Sorry, dog.
You're upsetting her.
She doesn't like.
She
Sorry,
doesn't
Annie.
like basketball.
She hates basketball. So you hear little squeakers squeaking on that laminate floor, and then these guys throwing this little ball around and trying to throw it in a net. It's just dumb. You know, little courtside tickets, the celebrities get out their little photographs taken, they watch their little game. It's just dumb. It's dumb, all right? And then you take it to female sports now, where I guess anyone can play, even dudes. No one's watching it. No one's gonna watch it. Who cares? Tell you what, Caitlin Clark will be forgotten sooner than later. She's a flash in the pan. For copper, analysts predict new all-time highs of $12,000 per ton by the turn of the year, bolstered by China's energy transition initiatives and expected grid-related stimulus. That's good for us. Those of you who are stacking your pre-82 pennies out of your change, keep them coming. Keep those pennies coming, because like I told you in the past, one day in the future, a pre-82 penny will hold $1 US worth of copper. Sounds crazy, I know. Doesn't it sound nuts? I can't wait to make that video, though. That's going to be a great day. I'll dump my pre-82 pennies out on the table, and I'll say, hey, each one of these is worth $1 of copper. There you go. But if you go to the store, they're only going to give you a penny. It's only worth a penny, right? You go to deposit them in the bank, bank's only going to count those as a penny. So why would you do that? That's Gresham's Law. Hoard them out of existence. Gresham's Law of Economics. Learn it, know it, memorize it, understand it, and hoard your pre-82 pennies. Like I've told you for years on this channel. Years. I love that. Jigsaw Jazz. That's a great point. $20 of pre-82 pennies will get you an ounce of gold. Could you imagine? What would that be? Hold on a minute. I got to do something. I got to do math. I got to do some math here. I got to do the math. Let's see. At $24.50 an ounce, divided by. So could you imagine that? That'd be $24 per penny. If the pre-82 copper pennies. But again, even back then, there were Coinage Act limits on how many pennies the mint could produce, because they did know, I think there was a disparity even back then. They didn't want there was a limit to how many pennies they could mint because the value wasn't really there still. But let's just say they hit $1 or $2 in copper value. It would be worth it. It's worth holding those pennies, especially right now. So if you're going to do anything in coin roll hunt, I think pennies is where it's at. Hoard them up. Even the nickels, because nickels have a lot of copper in them, but they also have that nickel value as well. So nickels are still a pretty good score. I haven't been to, let's do it. I'm going to bring it up real quick. That'll be a fun little exercise here on the channel. Let's go to, here we go. Here's our my coinflation chart. I want to check this out because I want to see what the values currently are. So here's the 82. Here they are. Here we go. So they're 2.8 cents currently. They're still 288% up. We've seen them as high as 3 cents each, right? And then the nickels, 46, yep, they're 5.7. So again, the only two coins in circulation that have any real value, any real intrinsic value, is the pre-82 pennies and the nickel. The nickels being at 5. But I've seen nickels as high as 7 cents in metallic value, intrinsic metal value. And we should see those numbers increase dramatically from this point. Currently today, if we go to metals, let's take a look. Bringing them up. Here we go. I've got silver at $29.62, up 55 cents today, up 1.9%. We've got gold sitting at $23.48, $2,348.40, up 1.3%. And it was up today, $30.40 an ounce, up $30 an ounce today. So nice little moves there for both silver and gold today. Copper, not as much so. I mean, it was like up a penny, 1.7 cents per pound. So it's at $4.49, almost $4.50 a pound for copper. Now, in other news, here we go. Short the housing market, right? 2008, all over again. It's starting. Home foreclosures are on the rise again nationwide. More Americans, and I don't celebrate this. This is not something I'm like, hey, I'm jumping up and down. I'm not. This saddens me. I think there's real lives being affected. This is real stuff. This is hurt. This is pain. This is suffering. And I don't like seeing regular people like us suffer. There's people that are in a tight place. There's people that are not doing well, and I feel bad for them. I truly do. But this is an indicator. This is a data point. This is numbers. Home foreclosures are on the rise nationwide. More Americans lost their homes in May as foreclosures move higher. I don't think this is going to improve. Not when you look at the backdrop, what's taking place, how hard it is to get by, and what's taking place domestically here in the United States. But again, give more money to Israel, give more money to Ukraine. Keep doing what you're doing, government. The people love it. People are celebrating it, right? They love it. Now, it's destroying the economy. It's destroying their way of life. People are losing their homes as a result of these actions. Home foreclosures rose again in May as Americans continue to grapple with the ongoing cost of living crisis. Inflation. Now, this didn't just evolve. This isn't spontaneous. This didn't just happen, right? Like I've told you in the past, there's men in suits. There's papers that were drafted and signed. There's policymakers. There are those who are directly responsible for creating this. They did this to you. This was done. This was purposeful. Cosmo, my friend, good to see you. Sup, Chad? Thanks for the super chat. I appreciate it. Always good to see you. Always good to have friends in the chat supporting this channel, and I very much appreciate those types of things. Thank you, Cosmo. This is according to a new report published by real estate data provider ATTOM, which found that there were 32,261 properties in May with foreclosure filings, which includes default notices, scheduled auctions, and bank repossessions. That marks a 3% increase from the prior year, although it is down 7% from the same time last year. I've seen this because I was looking at real estate in various areas, especially locally and around me, and people are dropping their house prices on the market $10,000 per week and still not selling them. So if you don't think property prices peaked already, you're mistaken. This is it, I believe, for a while. I think housing prices are going down from this point forward, and that's going to cause an issue for those who got in at the highest levels. If there's people with adjustable rate mortgages with these interest rates, that's going to have an effect on it as well. Banks are tied to these things. This is going to cause problems for those banks. And again, we saw this last week. We were reading some of these articles. There's some banks that are in some significant trouble already. Hundreds of billions of dollars. They're losing money. FDIC put a caution out, right? What was it? What was the number? Like 60-something banks? 89 banks, something like that. There's a lot of banks that are facing trouble. May's foreclosure activity highlights nuanced shifts in the housing market, said AT2M CEO Rob Barber. While we observed a slight increase in foreclosure starts, the decline in completed foreclosures indicates resilience in certain areas. Now, this is where you got to be cautious. These real estate guys and the guys that report in these articles, especially in the mainstream media, they downplay it. They have to. They don't want to cause panic. And if you remember, if you go back in the archives and you're a channel member and you can see some of those older videos, I would encourage you to watch the timeline of the meltdown. There should be videos titled where we discuss the meltdown of 07-08. And you look at the attitude, look at some of the quotes, look at some of the experts that came out stating things in regards to the housing system being sound. The market's sound. No. You see, they were saying those things, and it just wasn't true. Yes, Ned, I did see that Jamie Dimon is retiring. A lot of these guys are punching their ticket. They're getting out now before this all goes to heck, because I don't think they want to be tied to it. Nationwide, about 1 in every 4,320 housing units had a foreclosure filing in May. So think of that. 1 in 4,320. So just roughly, if you're in an area with like 20,000 houses, right? 1 in 4,000. So maybe 5, 6 houses. You start doing the numbers on that, 1 in 4,000, but that number could quickly start getting narrower. You could start seeing 1 in every 2,000 houses, 1 in every 1,000 houses being foreclosed on. It could get to that point. It could get even worse than that. But the problem was worse in several states. New Jersey experienced the highest rate of foreclosures last month, with about 1 in every 1,939 homes receiving a foreclosure notice, more than double the national average. Delaware registered foreclosure filings for every 2,595 homes. Connecticut saw 1 for every 2,600 homes. Florida, there was a foreclosure for every 2,600 homes. So those are unhealthy numbers. This is not good. Not good. The problem could soon get worse as high home prices, steep mortgage rates and property taxes, and rising insurance premiums bite Americans. Insurance premiums, you guys see that? They're going up, and everyone's getting the letters. I got one. Everyone, if you have home insurance, anyone who's got it, got a little notice, got a little letter in the mail. Hey, hi, hello. Yes, this is your insurance company. As you know, the economy, blah, 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 inflation, blah, 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 costs, blah, blah, blah. We have to raise your insurance rates, blah, blah, blah. Thank you. Bye-bye. Nothing you can do about it. What do? Not have insurance? You have to. So, there's that. Your grocery bills are going up. Everything's going up. Except your wages. Except your income. Right? It's great. They did give the military a 19% raise. That's great, right? They just did that. And then all the government agencies, all of them give each other their raises. Housing affordability is the worst it has been in decades, thanks to a spike in home prices and mortgage rates at the same time. Combined, the two have helped to push the typical salary required nationwide. This is crazy. This is the worst. It's the most expensive it has ever been in United States history to now buy a home. It's pushed the salary required nationwide for home ownership to $106,500, a stunning 61% increase from the $59,000 required just 4 years ago. Just 4 years ago. So when Biden became president, not blaming him, but his policymakers, the buffoons and the clown show circus that surrounds him, you only needed $59,000 to buy a home income. Now you need $106,500. Can you believe that? Is that crazy? That's crazy talk. A friend of mine down in Australia sent me some real estate information for there. It's one of the most unaffordable places in the world in Sydney. Nobody can afford to buy a home there. Prices are through the roof. It's ridiculous. So years of okay, then they can talk about the reasons are underbuilding, fueled shortage of homes, problem that was later exacerbated by the rapid rise in mortgage rates, expensive construction materials. What is that from? Inflation. Why does that happen? They printed too much money. All of this gets back down to the Fed, printing too much money, debasing the value of the dollar. Available home supply remains down 34.3% from the typical amount before the COVID-19 pandemic. Oh, dang it, I said the bad word. Oh my goodness, I'm going to get flagged because I said it. You're not supposed to say that because you can't talk about that. Oh my goodness. According to a separate report published by Realtor.com, higher mortgage rates over the past 3 years have also created a golden handcuff affecting the market. Sellers who locked in at record low mortgage rates of 3% or less during the pandemic began to have reluctant to sell and limiting supply further. Economists predict that mortgage rates will remain elevated in 2024 and that they will only begin to fall once the Fed starts cutting rates, which they might not do. They can't. They're in a rock and a hard place. If they start doing that, they're going to cause more problems for the currency, and they can exacerbate some of the already existing economic turmoil that we see. Ladies and gentlemen, the economic storm winds are gathering worse and worse, right? And everything we've talked about, housing crisis, dollar crisis, multipolar world, gold being harder to find, a rise in valuations of metals, the end of the petro-dollar pact with the Saudis, all of these things are gathering. They're all part of it. And they're all participating in this disaster. And the refuge that we've been talking about here for years has been what? Precious metals, right? What does this do for gold and silver? What is this uncertainty? Well, there might come a day where you can walk into a bank with 10 ounces of gold and buy a beautiful piece of property. 10 or 20 ounces might buy you a house. You might even be your silver. A couple 100 ounces of silver might buy you a house. You might be done. Just cash it out. Paid for. I don't know. I can't say that for certain. I don't know what the values are going to be. I don't know the future, but I know what it might look like. I have a pretty good idea. When you look at history, and you look at the trends that make this up, and you look at the story that we're sitting in the timeline right now, it starts to make sense. The picture becomes a little bit more clear when you put all these pieces and all of these different stories together. Does it make sense to you? It should. I hope it does. I hope it does. All right, my friends. That's all I had for today. That was it. That was 1 hour of Junior Small P Channel rant. That's here on the Junior Small P Channel live. And I hope you guys had a good one. I'm glad you were here. Thanks for tuning in. Thanks for participating in this broadcast. So to all of you, I wish you a good rest of your day, rest of your evening, rest of your week. Thanks for the support of this channel. Don't forget, before you leave, to hit that thumbs up, hit the like, so the algorithms think that the video was at least positive or good in some way. Post it, share it, send it. Subscribe if you're not subscribed already. And, if you're not a channel member, what are you doing? Sign up. Be a channel member. Get a coin after your name. And then when you're a channel member, guess what? You get access to all the videos that the other channel members have, which you don't. So there's a ton of videos in the archives that are hidden only for channel members to see and view. And especially some of those old ones like the Meltdown and things like that. So go check them out. Become a channel member. And I'll see you on the next video. And don't forget, hit that little bell down there so you sign up for notifications. You need to see if you want to be here when there's a live, you've got to have the notifications. It's imperative. Thank you, Phil Subtle, my friend. Thank you for the super chat, your support. I appreciate it. Again, that is the end of today's broadcast. Keep stacking. Keep being who you are, doing what you do. And thanks for tuning in here to the Junior Small P Channel. Have a good day.